Hello, everyone. Welcome to this new Rentals Club webinar. Today, we'll be talking about buying and selling short-term rental companies. We're right on time. So, of course, I want to give a few seconds for everybody to join. And while I'm doing that, I will be starting sharing a few slides, if only to tell you who's going to be speaking today, what you should be expecting, the kind of insights you're going to be getting, and what this online event has to do with a great event happening in Barcelona in a few weeks from now, the Exit Door. So let me grab these slides so it's easy for you to know who we are and what we're going to be delivering today. All right. Thank you for joining. I can see there's 20 of you already. That's great. I'm just waiting a bit for the room to fill up some more. Right. Yes, I see more people joining. Fantastic. All right. So let me get started. All right. So as I said, today we are talking about sealing the deal. And we are here with three companies, AirDNA, AGL Atelier, and Yes Consulting. Just to give you some ideas of what this is about. So first, you have to know that in a few weeks from now, on Friday, May the 19th, there's an event called the Exit Door. It's part of the Scale Rentals series of events. It's a 2-hour networking session, live, right, where people can network, talk about how to value companies, how to prepare for an acquisition, and there's like investors, buyers, and peers. Again, it's May 19, Friday, in Barcelona. What's important to know? This is part of the overall short stay week. So it's a week-long event taking place in Barcelona. So join us. We're going to be there. And what's exciting is that the three people talking today are actually going to be presenting at this event. And what they've accepted kindly is to give you basically a preview of what to expect for this event. So if you can't attend, that's a bit sad, but at least you're getting some value of it. But really, nothing can replace being there in person for this 2-hour event and the networking and meeting peers. Because as you know, it's all about the contacts you're making and the deals that happens behind the scene. So just quickly introducing myself. So I'm Thibault. I'm the founder of Rental Scale Up. It's a short-term rental industry news website. Sign up for our newsletter. Yeah, that's who I am. I just don't want to be in the way. Before we talk further about our three speakers, so we have Madeleine for AirDNA, Ivan from AGL Atelier, and Richard from Yes Consulting and Rentivo. Maybe I will let the three of you introduce themselves. Madeleine, do you want to get started?
Sure. Do you want me just to introduce myself, or should we get started on there?
Yeah, exactly. Just introduce yourself for the moment.
Sure. I'm Madeleine. I'm a public relations specialist at AirDNA. So we're a data company, and I work specifically mostly with press to get them the data they need to tell the story on short-term rentals.
Sure. Thank you. Ivan, how about you?
Hello, everyone. I'm Ivan from AGL Atelier. I've been joined AGL Atelier a couple of months ago. Used to be and co-manage a property management company in Barcelona for a few years. So passionate about the industry and very looking forward to the conversation today.
Last not least, Richard.
Yeah, thanks, Thibault. Yeah, in the context of today, I've been in a couple of industries and I counted up 12 sale and partnerships and acquisitions, one IPO over my last 30 years. I've been a manager and I've worked for some very well-known industry companies as well.
All right. Thank you again. Three of you are going to be speaking on stage in Barcelona. And thank you for accepting to share a few elements, previews that you created just for this event today. Again, so, we're going to be sharing a few slides, and each of the speakers here will be going through parts of the slide. Each of us has about, have about 5 to 6 minutes. So it's frustrating on purpose, so that you really want to go to attend the event for everyone. obviously you're going to get recording. You're going to get also in a follow-up email if you're attending. If you're going to be getting also the slides and maybe a few links and or QR codes to know more about the event today. So I'm going to get started. I think, Madeleine, you're the first. Let me share with everyone your slides, and I'm going to be clicking for you. So shall I go with the first one?
Thank you.
Okay.
So for those who don't know us quickly, at AirDNA, we have the largest historical and most granular data set in the short-term rental industry, tracking the performance of more than 10 million properties on Airbnb and Vrbo in more than 120,000 markets worldwide since 2015. We use this data to inform a range of different products, from free reports and blogs to our Market Minder platform for individual investors and hosts, and our property performance dashboard for operators who are serious about scaling. I won't bore you by explaining why utilizing data is essential to making acquisition and investment decisions, because it should be obvious by now. Anecdote alone is not a good business strategy, and your bank or financial backers will want to see the numbers before supporting you in any moves, so you should too. If you go to the first slide there, Thibault. So looking at the data, oh, wrong way. It's a great time to be in the short-term rental industry. We're seeing all the signs that this summer is going to be even stronger than last year, with demand up already 10% in the US and 40% higher than last year in Europe for the summer. We actually just released today our latest monthly market reviews on our website, and this is the most up-to-date public data available. I'm happy to share the top findings with you and how they relate to making acquisition decisions. So the big story recently has been around supply. Is it growing? How much and where? Supply in the US after booming in the spring of last year has been relatively stable since July 2022, with some obvious seasonal fluctuations. And in March, this rebalanced supply and demand closed the occupancy gap with the year before to just 2% below, the closest it's gotten on a year-over-year basis in 12 months. So it looks as though the phantom of Airbnb bust, which was making the rounds on social media and in the press from last summer, is finally dying down. Of course, this isn't the case in all destinations, and it pays to pay attention to trends across different types of markets. So in terms of demand, small cities and rural areas are seeing the most growth year over year, while destination and resort locations like mountains, lakes, and coastal areas are lagging behind because they reached such high levels last year. In terms of supply, the pattern is the same, with small and mid-sized cities seeing the highest growth and resort markets the least. So looking at the top 50 markets in the US, which you can see on this chart here, only 6 actually saw a decrease in demand year over year in March. But in terms of occupancy, more than half of them saw a drop. This is partly because occupancy last year was exceptionally high, but it also tells a story of supply growing a little too fast in some locations. So if you go to the next slide, Thibault. In Europe, on the other hand, supply is just above 2019 levels, just 2% in March, while demand is booming with a longer high season in many locations, and occupancy remains above both last year and 2019. Of course, this doesn't mean that every location is growing, and in the first quarter of this year, growth was strongest in Southern Europe, while Northern European cities like Amsterdam, Dublin, and Cologne were all more than 60% below their 2019 figures. While some more touristic large cities, including Barcelona, where we'll be speaking, are recovering really well, northern cities, and particularly those like Amsterdam, Dublin, which are quite politically quite hostile towards short-term rentals, are lagging a long way behind. We're also seeing, despite a bad winter for snow, alpine destinations had a really great winter, with 22% more demand between December and March than the year before. This pattern also played out in the US, where record snowfall means that even April is seeing really high demand in ski destinations. While of course that's a little concerning from a climate change perspective, this is a great sign that alpine destinations are adaptable and still have plenty to offer through the summer, with hiking routes and outdoor activities, which have all given tourism a great boost since the pandemic in these locations. So if you just go to the next slide, Thibault, what can this tell us about where to put your money? While we don't like to use the term oversaturation, because that's not really what's happening, some markets now are seeing that only high quality or really well-managed properties are able to maintain their occupancy levels. In a market with more competition, it's more important than ever that you price correctly and optimize your listings far enough in advance. Optimization starts with having the right properties on your roster, and that means choosing the right markets and the right properties for those markets. We recommend looking for markets where demand is growing faster than supply, but make sure it's not a one-time thing. So look for seasonal patterns over the last few years and into the future, and take into account other data on home purchases, new construction, and further investment into the market in terms of recurring events, tourist attractions, things like that, to see where you think it might be going. We also recommend using different filters. So while a 6-bedroom villa with a pool might sound amazing, is there really demand for this in your market? Or is there a gap in the market for something smaller, perhaps with a specific amenity, which will reach a higher occupancy and a greater ROI? At the exit door, I'll be presenting our latest list of the best places to invest in the top 5 countries by the number of attendees in Short Stay Week. So these are Spain, Italy, the UK, France, and the US. We look into many different factors for these, including growth in demand, growth in supply, property churn, house prices, average revenues, loads more. Of course, different factors are important to different people, depending on your strategy. We're also careful not to recommend markets with really tight regulation, though in some cases, restrictions on supply growth, in fact, make for better occupancy and rates, if you're lucky enough to be able to operate in the destination. Really looking forward to sharing more data with everyone at the exit door on May 19th. You can see those reports that I was talking about here through the QR codes and on our website. And I'll pass over now to Ivan. Thank you.
Thanks, Madeleine. Fascinating. So great data. It was so great to hear, and then even the advice you shared in the end on where to invest and looking at markets that are growing, but should not be a one-time thing. So indeed, I'm sure these reports people can download have lots of value. So now we're moving on after we've talked about the supply or where to invest, or which means basically where should you be buying company, for example. Let's talk about the buyer and a seller's viewpoint. Ivan, to get started, which viewpoint will be taking, buyer and seller?
I'll be going for the seller side, so rather Richard will be first introducing the buyer side, buyer point of view.
Let's do that.
If you want, if totally up to you guys.
Yeah, it's probably a good idea to go buyer first.
All right.
So, do you want to push up a slide, Thibault? And I'll. That's not me.
Oh, I thought it was Richard speaking first, but fine. Richard from Yes Consulting, go ahead.
Yeah, thanks for that, Madeleine. That was very interesting, and probably explains why I have so many phone calls from people asking me if there's any inventory for sale in Southern Europe as opposed to Northern Europe. So your numbers are showing that. Yeah, this is less metro-sized presentation because I've done a fair amount of buying and selling and partnerships and agreements over the years. It doesn't matter what you're doing in, whether it's diagnostics or rentals or construction or anything else, you always end up with the same issues. So I thought it'd be kind of cute to change the word from mergers and acquisitions to matrimony and accord, because if you're going to buy a company or you're going to sell a company, there's a lot of things involved here. It's very easy to sit around a table late in the evening and figure out that your company's worth X, but there's a lot of water that needs to go under the bridge before you can actually achieve what you actually think. So the first one is a good fit. I suspect some of the people actually listening are not thinking of acquiring. They're probably thinking of what's my value? Can I sell? Who'd be interested in it? And it's not just about the value. First of all, do you have the right culture? I mean, I've worked for an American company acquiring in Europe, and it was radically different to a UK company buying a UK company, for example, which might explain why it's difficult often for American companies to understand, let's call it Italian culture or French culture or even English culture. Does the business model fit? Do you have the correct type of business model? Is the acquirer in the same market approach direction as you? Maybe they're a franchise. Maybe they're not looking for a straight commission model. Does your business have any challenges? These are high level questions. And the main one on here is the deal. How do you think? And how does your acquirer think? Because they can be two radically different things. So that's the beginning of the courtship. This isn't like Tinder yet. I'm sure that'll happen. Tinder for properties. But if you move to slide 2, Thibault, you'll get we've had the initial conversation. Do you think we should get engaged? And what happens then? You get into a much deeper discussion about everything. And if you relate this to a marital approach, there always tends to be one of the people in the engaging party who's probably slightly more dominant than the other. And it's probably going to be the acquirer because they've got the pot of money and you're actually looking out for it. So they're going to look at the portfolio, the assets in the marriage. They're going to look at who's in control, the management of the company. Is that you? Is it the staff? The operations. Who does the operations? Is this as an agency? Is this as a full operational business? I mean, I've aligned it to who does the cooking and the ironing, and I think we know there's always one side of an arrangement that does more than the other. Cost centers. Who controls the credit cards? You know, what are the costs spent on? Are they very high? Are they very high in particular areas? Are OTAs 95% of all your bookings? Can you increase value by doing that? These are the things that acquirers are actually looking at constantly. Staff, children and in-laws. How many staff have you got? Are there liabilities? What countries are you sitting in? These are things like 2P to be involved in all this. What do you think of the staff? Have you spoken to them, et cetera, et cetera? And the performance of the company. You know, one thing people don't tend to think of is how well has my company's been performing over the last 3-4 years, maybe? Have we accelerated growth? Have we grown 30% year on year? It's a great thing. It shows you're actually got momentum. You're doing things right. You've become more attractive. So, you know, we're getting past those questions about engagement. I like your assets. I like your performance. I like how much ironing you can possibly do for me. The staff and the management, well, we can talk around that. And the cost centers, I probably want to have a little more control than you do over those sorts of things. So move to the next slide, Thibault. So we got to the bit about engagement, and we decided we're actually a good fit together. The acquiring business fits the selling business. There's a good cultural fit. There's a good understanding. We've talked about it. We've had a few meetings. We like each other. We've both got the same direction, and we understand how this could actually turn out at the end of the day. So you have to prepare for a wedding. It's not a very simple affair. I'm sure many people listening have been through them, and so have I. So this is the bit when it starts getting very interesting, because we have 150,000 managers worldwide, and every single one of them operates differently in some particular way. In between them, they'll use 500 different software systems. They'll have different bank accounts, different finances, different commissions, different owner structures, different arrangements. Sorry about that. So first thing is gather facts. You're going to sign an NDA to that, and you're going to start gathering the information for the wedding. Once you've got a lot of this information, you're going to start analyzing it. Now, I'm going to hand over to Ivan fairly shortly, but gathering facts is a very important part of this, and that's all to do with preparation. You're going to analyze all that, and you're going to match that with an analysis of the market. So where Madeleine stepped in with AirDNA, they'll be using rafts of tools to identify where the challenges might be, where the opportunities are, where the growth curves are, everything related to it. And I actually really like the comment about legislation and the challenges we might all face with that. We might all be, a lot of companies might actually be sitting on a precipice right now, and have spent years and years building a business that could be wiped out overnight because of legislation. So if you're going to sell, maybe sell quickly, or wait till you got the license, and then it's more valuable. Okay, so we got to the part of the wedding where we go to see the priest and the vicar, and we're going to sign up, and we're going to pay the money, and we get a letter of intent out there. We say, yes, we're going to get married. I'm going to love you forever. And this is how much money you could probably get. Bearing in mind, we now need to move on to the real due diligence of the company, because everything you've said and the information you've given us already sounds great. But actually what we want to do is we want to dig into your soul right now. And this is the part that things can become a little difficult. Slide 4, Thibault. So my experience of this, and I've dealt with quite a few companies who've been for sale. And one thing that happens is that you've got an offer on a piece of paper, and it's a non-binding offer generally. And it's a lot of money, generally a lot of money for most people. Capital appreciation for anybody in this world is a very hard thing to achieve. So selling your assets is, is nice if you can get the right money. The problem is there's a timescale attached to it, number one, and you need to get all your ducks in a row. But what happens is people say, well, the money's coming. I'm going to book a holiday. I'm going to put a deposit down on the Ferrari. I'm going to pay the mortgage off. It doesn't quite work like that, because there's always a but. And the but is where Ivan comes in, because it was all great up until that point, and we haven't even got married yet. So that's the end of my presentation, and there's a QR code on there as well, which will, after the show, will provide you with a multi-page brief on buying, selling, valuations, negotiating, closing, and how to find buyers and sellers. So
Thank you.
Thibault.
And thank you, Richard. It was great, and great to hear. And I heard something I thought you never tell me on a webinar, like that you love my assets. That's just so surprised at that. But it was indeed we're joking a bit, but it is indeed very interesting how you build it with an analogy to getting married. And then there's two sides to indeed getting married. So that weekly browse back through my slides to go back to Ivan, indeed, because let's talk about the other party, the other side of the relationship. Ivan, now you can take it away, please.
Awesome. Thank you, Thibault, and thank you, Richard and Maddy, for presenting in the first place. So at AGL Atelier, what we're doing is advising and supporting property management companies in their growth, but also at helping them for preparing for exit. So we are actually accompanying them throughout the process, all the way until the moment that they would be potentially in the market, by making sure that they have analyzed the market, put all the documents together, and get all the numbers right. So you can go to the first slide, please, Thibault. So basically, when starting conversations with property management companies, and as Richard mentioned earlier, we get to see different types of property management companies and different type of property managers. For most of them, in traditional vacation rental industries, we would actually have some profile of the family business and people who have been running business for 10 to 20 years, who are great and at performing in terms of hospitality and welcoming guests since decades from all places of Europe. But eventually they would need assistance and supports on anything related to financial side, and get all the advices before selling the business. When we initiate the conversation in the first place, we would first try to understand what are the expectations from them. So we would try to understand what is the objective for selling the business, and what actually are the reasons of potentially selling the business and the property management company. We would also try to understand what would be the ideal timeline for them, if they want to do it in the short term, or if they rather want to do it in the long term. So Richard was mentioning the legislation that can eventually trigger the wish of selling a company, and maybe it would actually occur a little too fast and be in a rush. So this is the things that we are also assessing. And as the third point, also the advisors that would be involved in the assessment. So they are tax advisors, accountant, many other advisors that actually are part of the conversation. And so we would like to understand in the first place who are actually going to be involved. We then move to the first audit phase. Financial hygiene, profitability is something that AGL Atelier has been actually emphasizing on for a couple of years. And this is the first thing that we are actually looking at, and most of the operators should be looking at prior engaging in an exit process. Look the performances as well, especially the past 2 to 5 years for traditional vacation rental property management company as an example. And also we'll be obviously looking at the ongoing operations. Richard has mentioned the team members, whether it's a family business, whether it is a operating in different markets, the team structure, etc., which is very important for the beginning of the audits. Contracts is obviously the key elements for completing the audit, and many other actually aspects that we will be covering a little bit more in depth in the scale at that moment. So following this audit, we are actually proceeding with the valuation assessment. This is the key element to assess what will be the value. Obviously, the EBITDA multiple is a bit of the key question, and the questions that we are often asked here at AGL. We obviously need to take into consideration the internal indicators, which are mostly seen during the first audit, and then external indicators, which are the ones that Maddie actually has mentioned earlier, related to the markets, and legislation is also another key element. Once all of this is actually completed, we're ready to go for to the market as a property management company. It's important to secure these 3 steps first before, in order to manage expectations, not only for the seller, but also for the buyer, and also to make sure that there is no negotiation that's sort of fall short because of this non-preparation in the first place. So obviously we'll be looking forward to go a little bit more in depth during the scale exit tour on the 19th of May, especially related to the first 3 steps here that we see on the screen, and in order to cover it all.
You want me to?
So this is.
Yeah, go ahead.
Yes, yeah, no, so this is the second slide. This one is related to, especially related to the audit in the first place, the second steps that we were seeing in the previous slide. So I might actually not go through all of these ones, but rather keep it for the scale. But there are examples. For instance, positive net churn is one that I believe Richard was initially planning on mentioning, in order to have to make sure that there is growth within the property management company in terms of acquiring properties versus losing owner contracts, which is one of the key elements that we are looking at, and all the KPIs performances that that Maddie here has mentioned earlier. So yeah, keeping all the other key elements also for the scale rentals.
That's fantastic. Thank you for showing this, because today is all about giving a preview, and that's really fantastic, because obviously what Madeleine has done, Richard and you, Vaughton, is like, it's just a glimpse at, this, what is it, about this 2-hour event. And thank you again for all three for doing this. Maybe there's a question, just make sure, let me go through. Do indeed recap a bit if you really want to attend the event, which would love to see you there. You have to go to the Short Stay Week website, right, and find the exit door. So I put the link at the bottom. Probably we are going to put it again in email for the follow-up email. So go to shortstayweek.com/the-exit-door, and you can buy a ticket for the exit door. You can also buy the ticket for the whole Short Stay Week. Lots of events. It's going to be a 2-hour networking event again for everyone. I'm just checking whether so we don't have any question today, so which is great. But oh, maybe there is one. Let me just see. Oh, okay. Thank you. There's one question. All right. The question is, what EBITDA multiples are common oh, how have you seen so far? So it's a classic question about multiples, and here talking about EBITDA, EBITDA. Who wants to maybe one or two answers on that?
Yeah, I mean, I'll have an answer on that. That's one of those very general questions. So I've seen as low as 1.5, and that's including owners' extraordinary earnings as well. I've seen times 15 as well, a much more luxurious portfolio of high earning properties with a great brand name attached to it. I personally have sold a business as well, and I'm not unhappy to say that was 6 times multiple. The common understanding at the moment of generic businesses, if you listen to people like Steve Milo in the US and various other individuals, they'll be telling you it's somewhere between 3 and 6 EBIT on an EBITDA, which might be a little low depending on who you are, where you are, and what you've got. But it's like everything, you know, what are you selling? If it's a really rubbish business, you're going to get low numbers. If it's a great business, you're going to get a lot of high numbers. One thing is pretty evident. The more really good properties you've got, the more valuable you become as a multiple of EBITDA. So if you've got 5, you're not worth very much. If you've got 500, it's almost a logarithmic scale from there upwards.
All right. All right. So I think that's good. Again, that's a preview. I'm sure you're going to be fielding way more questions during the real events. So everybody have your questions ready for that. And do we have, we're running over, just making sure, do we have time for one last question or not? Yeah, you okay with that? Feel free to let me know, right? This is, okay. So first we have good words from Chloe, who's really is happy to meet you all at the exit door. So Chloe, looking forward to seeing you there. But Jim has a question, which is, get ready for that. How common is it to sell both the physical real estate assets, homes, along with the brand, SOPs, management, IP, etc.? Very good question. How do you more accurately set the whole package deal ask price, right? It's just not, there's all kind of things. And I think something, Ivan, there was something about having different revenue streams, for example. So let's imagine have all this. Anybody has any short answer to that?
No, well, the short answer is ideally to maximize the revenue, maximize the value, and therefore doing company valuation instead of asset valuation. So if brand, obviously valuation is involved with the SOPs and the rest of the actual company infrastructure is within the process, then it increases the value. So what we are seeing, for instance, in Europe, from an AGL Atelier standpoint, is with the transactions that we would be involved with, is about 75%, 70% would be company valuation against asset valuation.
Yeah, that's really interesting, Ivan. Yeah, I mean, there's companies looking at buying companies, others are looking at just buying the contract assets out and bolting them on, particularly frequent in urban areas. It's a really interesting question, that one, actually, because it's really dependent on the size of the physical real estate, I guess. I mean, my family had 7, it's not a big portfolio, small portfolio, 7 properties. And we made a lot more money out of selling those than we would have done actually as individual residential properties, because the track record associated with the rentals was actually so good that we actually got premium price for all the properties. I mean, that's a small portfolio. If you're talking of hundreds of properties with a very big brand on top of it, then again, you're going to maximize your potential valuation on that as well. But it'd be interesting to know from Jim what size of the portfolio he's sitting on.
And right. All right. That's maybe a conversation to have at the actual event. If there's no, yeah. Okay. So I'm going to close today because we're supposed to do a half hour. And again, I'm so thankful that all of you were there today to start talking about the topic. You can see you can already getting to talking about topics like multiples, and we talked about into the markets where to invest. We talked about the law, right? It's just, I'm going to plug here rental scale up. But I just wrote an article yesterday about a piece of software that's used in the US, for example, and by municipalities and counties to just track illegal properties or legal, whatever, short-term rentals, see who has a permit or not, and track the booking activity. So kind of like data, the scraping and taking, and just to really be able to track more and more short-term rentals. So this big data thing as well, which is happening even to track properties, could be threatening, let's say, property managers who have contracts for which there's no permit, or where the law is going to be changing. So indeed, these are this is such a great topic. Let me thank everybody before we leave. So Martin Parkin from AirDNA, Yvan Givelet from AGL Atelier, and Richard Vaughton from Yes Consulting and Rentivo. Thanks again for your time. We're gonna be again sharing your contacts. We're gonna be sharing links you shared in the follow-up email. So I look forward to seeing all the speakers and most of you attendees in Barcelona in a few weeks from now. See you, everyone.
Thank
Thanks.
you.
Thanks, Thibault. Looking forward
Thank
to it.
you.
Take care, everyone.